Welcome back. Let's catch you up on a couple stories that should be on your radar today. It's rapid fire, and here to break down the headlines are Robert Frank, Kate Rogers, Bill Griffith, and a special appearance from Ron and Sana.
It's costing extra, by the way.
Yeah, well, I'm sure it is. And this is how you know it's going to be good. We're going to talk some manufacturing and some markets today. The U.S. manufacturing sector contracting based on the latest ISM survey. So any number below 50 signals a contraction, and the index for August dropped to 49.1. That's the lowest since January 2016. It ends the 35-month expansion period. Couple of nuggets worth mentioning as well. Not just the headline, the new orders index dropped, and the employment index, and that's where we're looking for sort of the contagion effect, so to speak, from tariffs onto the rest of the economy.
Just as the new tariffs kick in as well.
Exactly.
Not a good sign.
Exactly.
Yeah. I mean, this is, we've been in this bifurcated economy for a while now where the consumer's doing fine, manufacturing's been reining it in fearfully, and now we're starting to see it even pick up some pace here.
Right, and it's not to say, Ron, as you know, that it can't come out of this. 2016 being an interesting example. A lot of analogies then. We're worried about global growth, worried about China. Then you had Trump's election. For a couple of years, everything was off to the races. Now it kind of depends on the president once again.
Well, we also don't have the same fuel that we had in 2016, 2017 to get us back to the races. And we have this headwind that we're calling a trade war that shows no signs of letting up. And so manufacturing around the world is contracting. Germany's about to go into recession. Yeah. China's decelerating, I think, more rapidly than people realize. And so you've got 9, as we've said before, 9 different countries that are in or near recession. And look, the consumer is always the last to slow down. I was in the mall last night. It was packed. It was jam-packed. Back to school stuff was going on. Right. You know, Apple store was busy.
But it's not just that, because we've had these recession fears time and again. And in the first half of this year, consumer spending was so strong. I mean, we're talking about almost 5% growth. It was really, really good. So it's not just, is it going to slow a little bit or is it going to hold? It's kind of like that has done very well. And if manufacturing is specifically hit by the tariffs, is it as much of a tell about the business cycle, quote unquote, or is it really just telling us about this targeted part of the economy?
Well, I think if you got rid of the trade war, a lot of tensions would ease and manufacturing would bounce back. Having said that, if you go back to the prior recessions, like in the year 2000, for instance, December was very strong for the consumer. And then by the time the stock market had crashed in the middle of the year, everything went in a different direction.
Yeah, I know. And so we'll watch Apple, for example, in particular. The tariffs that hit today include a lot of popular products, 15%, levies, to the extent to which people see that. And does it have I mean, consumer sentiment did slip on Friday. It's not like this has gone totally unnoticed.
Yeah.
All right. Anyhow, let's talk some Amazon. Those shares are roughly in the middle of their 52-week range right now. But RBC's Mark Mahaney says they could rally 50% from here. He raised his price target to $2,600 from $2,250 on Amazon because of the rollout of Prime one-day shipping. He thinks that will drive increased subscriptions and more spending per household. So look, everything's fine. One-day shipping to the rescue.
I mean, this note was interesting. They said the average Prime household spends about $1,800 annually on Prime in general, just ordering things for this quick shipping. I mean, I know I certainly use it. I can't even imagine how much I'm going to be ordering when it's one day. The price target,
though. Will that make a difference to you?
Yeah. Oh, yeah.
I thought it was
Big
one day
time.
already. I mean, most stuff I get is already one day or like 2 hours later.
Yeah.
It's crazy how good it is.
You live in the city.
Yeah, but the thing, from a value proposition, this will make their market cap $1.2 trillion.
Wow.
Jeff Bezos goes back up to $150 million. Here's the irony. Mackenzie Bezos gets up over $50 billion. She will be worth more than the Walmart heirs.
Wow.
So there's a little bit of retail irony there.
The irony is not
the
so
market
big,
cap
right?
is
I mean,
incredible.
Walmart was the disruptor of its day.
That's right.
They were putting out mom and pops.
But let's not forget, I mean, let's face it, this is a pretty aggressive call on Mahaney's part right now to go 50% in a year just because of the Prime thing. What was the other thing I was going to say? The macro environment is going to dictate this to a great degree as well. Yes, we're saying the consumer is fine at the moment, but I think that we're going to be heading into a period, especially as we head toward the holidays right now, where if prices are going up because of the tariffs, it'll slow things down. There's no way we can have the kind of Christmas we had last year.
Well,
very strong Christmas
I also think about
year.
some of the criticisms about the platform now for Amazon. A lot of third-party retailers, a lot of stuff from China that's not being fully vetted, safety issues we've talked about. it needs to move. Yes, one day serves the consumer. It needs to keep growing share if it doesn't want to be hit by that slowdown.
And how many non-prime members become prime because of this?
One day,
aren't prime already. I mean, I just don't. I think it's already a well-saturated group. And then people who are just, I'm waiting to become a prime member until it gets to be one day. I think that's a pretty small group.
I mean, I'm still fascinated by this entire delivery phenomenon because when I was growing up, we had a milkman, and we had a guy who delivered groceries, and we had, all this stuff went on in the 1960s, right? I mean, so Mr. Nowak used to show up at the door.
What color was his horse?
He didn't. Well, he had graduated from that, but we did have a rag and knife guy that used to come through the neighborhood.
Really?
Yeah, and so that was back far enough, but Mr. Nowak had a little gray outfit and a cap and everything else.
One area where we have seen some real progress, Ron, is in teeth straightening. Okay,
Yes.
SmileDirectClub is kicking off its IPO roadshow today as the company reveals more about its plans to go public. Leslie Pickard knows this one inside and out, and Leslie, this one's disrupting the disruptor of the braces industry.
Indeed, they are. They do this teledentistry process, which is different from your traditional orthodontia. They kicked off their IPO roadshow today here at JP Morgan, where they met with the sales force to help kind of explain to them how to market this deal to investors. They also went on to Citigroup after that. Those two banks are the two lead underwriters in this deal. Now, they revealed in an amended prospectus this morning that they were seeking about $1.3 billion in this IPO at the high end of the range, which would actually make this deal the 5th largest U.S. listed IPO of the year. And their valuation is a whopping $8 billion, more than 2.5 times their latest private round valuation from just last October, Cal. Now, as you alluded to, the company makes teeth alignment at a fraction of the cost of even the traditional Invisalign that people are familiar with these days, and especially much cheaper than braces. The way they do that is they send you the molding for your teeth to your house if you choose, or you can go to one of their Smile shops, or you can go to some of the drugstores that they're affiliated to take an impression of your teeth. Now, that is then sent to an orthodontist. A licensed orthodontist helps you create that plan for your teeth straightening procedure, all at just under $2,000, Cal.
Yeah, no, it's said to be about 60% less than traditional orthodontic braces. They're going to open up within CVS and Walgreens stores. Invisalign was one of the best performers in the NASDAQ over the last couple of years, but SmileDirectClub has really, and there's an interesting kind of rivalry, frenemies thing going on there too, Kate.
First of all, wish this was around when I was younger, because I had braces for like 10 years, like the old-fashioned, metal kind. I think this opens you up to obviously older people too, who want to maybe straighten their teeth but don't want the traditional braces, and the cost, as you said, 60% less than traditional braces. Looks better, cheaper, very accessible. Sounds good.
Not making money yet, Robert.
Not making a $50 million loss just for the first 6 months of this year. And I know it's cheaper than orthodontia, but they're relying on this becoming a mass consumer brand. And if the economy turns a little bit south, $1,900 is a big check for the average American to write. So I think this is a peak economy phenomena.
$3,000 for braces.
No, I know it's less, but it's still $1,900 or $2,000 with all in is a lot for a mass market consumer brand to keep growing at 30, 40% a year.
And I get a little sweaty palms when I hear that you're being evaluated by your orthodontist remotely. You don't even go see this doctor for the most part. My thought then is, what could possibly go wrong? So I understand that that's one way they keep the cost down.
Right.
But at some point, you can take this too far in trying to provide affordable health care. You need the assistance of a doctor right there.
Leslie, what were you going to say? Last word?
Well, I get.
Oh, I was just going to. I was just going to say, to Robert's point about the cost, they have a really interesting part of their business which actually generates revenue, which is their SmilePay financing option. And they don't do any credit checks. They allow people to put $250 down and then pay $85 a month for this service. It's also covered by some insurances. If you have a certain type of dental insurance, that will cover this as well.
Do they repo your teeth if you don't pay?
Really interesting.
How does that work?
No credit checks. Here we go again.
So the financing arm makes money by by giving money away, basically.
Yeah, that's typically how it's done.
Yeah.
We had no money, so my dad fixed my
I think
teeth
their
for me.
average
That was a
APR is
whole
like
different-
17%.
Yeah.
Leslie, thank you. We'll let you go and get back to the roadshow. Leslie Picker will be following this IPO all the way through for us. Moving on, Facebook could be following in the footsteps of Instagram as the company considers removing the number of likes on each post from everybody except the person who posted. The head of Instagram had described their move previously as a way of making a less pressured environment on the app. Are these moves, guys, going to fundamentally change social media, or is it just
what's wrong with it?
They're going to find
what's wrong with the likes.
the people just tally. They say it drives
makes people
all the
feel
bad.
bad.
Not
Bill,
everyone
if you
gets
get
as
more-
many likes as you, Bill.
If Kate's always getting more likes than me, which she obviously would all the time, then that makes me feel bad, and my life is lame.
Wait a minute. Any move a company like that makes has got to have a financial motivation for it. So are they losing?
I think it's an
Are they losing subscribers because
It's
people aren't getting enough
discouraging.
likes?
It's
I think-
discouraging for people that don't get much likes to post because then they don't post as
They don't
much
post as much.
because they know, oh, that's not going to get many likes.
So
they
the
don't-
solution is nobody gets likes.
Exactly.
So then what happens?
And what
You
happens to all
lose
the
even more people.
influencers? That's how they make all of their money,
Social
right? I have
media
this many
socialism.
followers.
And
That's
all
what
the
it is.
millennial narcissists who have to live off these likes that
It's
There are
not,
no,
right. You know,
not
there
just
are no
millennials.
boomer
It's not just,
narcissists, I guess, huh?
well, there are a few. I mean, you're sitting among one right now, but I mean, it's,
But if you look at the pressure coming from Washington, when you've had Josh Hawley present legislation that would literally limit, the infinite scrolling and some of these other things, they're probably saying if these little things like this are going to be targeted, it's better for us to get ahead of it before it actually deals a blow to our business.
but of
model.
all the things to target, that would be the least objectionable, it would seem, when it comes to Facebook.
I don't know. You know what they say? I mean, Ron, if they're targeting infinite scrolling, you don't think they'd be coming for likes?
Why don't they target privacy and?
But that's a good question.
Here's
Yeah.
the concept. Protect our accounts, okay?
Yeah, that would be better.
Leave the
Finally,
likes alone. for
sort of
Pete's
in the
sake.
vein of social media, the NFL is teaming up with TikTok to help score with young viewers. That's the Chinese social media app with huge hit with Gen Z. It was the third most downloaded app in the first quarter in the U.S., and the partnership with the NFL includes highlights, sideline moments, behind-the-scenes footage. Since I'm trying to figure out TikTok, I checked it out.
Wow.
As the ancient
my
millennial
kids,
that I am.
yeah.
But this is where the energy is for the Gen Z set, and this is also a bigger competitive threat, I would think, to the Instagrams and
But
Facebook.
what makes TikTok great to those who love it is that it's sort of home-produced, very amateur, very rough, and it's kind of the night watchman doing a dance, and you like to see that stuff. So
Can you do likes?
I don't know. Yeah, probably.
Yeah.
But what? So the idea that you could have a corporate entity like the NFL sort of gather momentum on that's a big ask. I'm not sure it's going to work.
Well, they also have a bigger problem. I mean, kids playing football, the participation rate is down.
Yeah.
Participation rate in baseball is actually moving up. And this is the concussion, CTE issues that are dominating parents' concerns. So I don't care how many videos the kids watch, it's still up to the parents to say, okay, you can go play Pop Warner now.
Well,
it may not happen.
Football definitely has jumped the shark. Betting on games now. You have football games where you're betting intra-game. Now they're
From your
going with
TV,
the TikTok thing. I mean, they're trying all kinds of things. The way the movie industry tried to keep people away from television years ago.
Well, and like you guys said with social media, if you fix the core problem that people have with it, maybe that's a bigger thing. Privacy in that case, in this case, the safety thing. The season's about to kick off in a couple of days' time. I mean, how that goes is going to tell you much more about how people engage with football than whether they are on TikTok.
I think from what I understand,
Yes,
I'm
if we
going
can
to
get
use
her to watch football, then you're on
very
to something.
loosely.
Not a fan?
I won't be watching football at all.
Or anything.
Why?
No, we don't have enough time. But I don't really understand TikTok, but I think you can put out like a call for action and challenges. So if that's a way to get these kids engaged to make their own videos, and it seems like a quicker and easier way to make what's similar to a YouTube video, I think. Do I sound cool?
We all
I don't
sound
know.
so old.
You always sound.
No.
I did the highlights of the beating that New England's going to take at the hand of Buffalo.
All right,
in late September
no, we're
would be the
not
thing I'm looking
devolving
for.
into pro Bills commentary.
Yeah, it only
Thank
took
you all.
7 minutes to get into Buffalo Bills.
Ron, thank you for joining
you.
us today. Bill Griffith, Kate Rogers, Robert Frank, thank you as well.